Okay, we're good.
Good morning, everyone. I'd like to call the County of Sullivan Industrial Development Agency special meeting to order.
Good morning, Mr. Smith.
Here.
Mr. Smith is present. Mr. Steingart.
Present.
Mr. Steingart is present. Mr. Vallone.
Yeah.
Mr. Vallone is present. Mr. Brooks.
Yes, sir.
Mr. Brooks is present. Mr. Sykes.
Yes.
Mr. Sykes is present. Mr. Siegel, Ms. Lara, Mr. Gunther, and Mr. Puello are absent today.
Okay, I need approval of the meeting minutes, February 9th, 2026. Regular meeting, February 25th, 2026, supplemental.
We'll make a motion.
I'll second. All in favor?
Aye.
Any opposed? Carried. Bills and communications?
Yes. So today we have 4 bills, an amount of $15,928.33. And then there was also the last pilot distribution number 4, which should been in your packet.
We need a motion to approve the bills?
I'll make a motion.
Second. All in favor?
Aye.
Any opposed? Carried. Staff report?
Have no updates on the staff report, but you know, we've been looking at the audits in Paris. But if anyone has questions.
Do we need a motion to approve that? No. So on to new business. First resolution. Authorizing the agency to provide funding to the partnership for economic development in Sullivan County for the first calendar quarter of 2026. I'll make it. So.
Okay.
Motion is, do I have a second? No second, all in favor?
Aye.
Any opposed? Motion passes. We have another resolution extending the sales tax abatement period for the Homestead LLC and North Branch Cider Mill LLC project. April 1, 2026 through and including September 30th, 2026. We have a motion? John, second, Phil. All in favor? Aye.
Aye.
Opposed? I have a question about that. Sean made the motion.
And who seconded it?
Or Phil, sorry. But I have a question. I mean, this has been going on since 2023, they started this,
Yes,
and how many extensions have we given them?
well, they've been extended consistently since the start of the project. I know they were, I wouldn't say delayed, but their major funding came about a year after approval. So they're now, we closed on a big loan, just last year, I think, on this project. So they're still moving forward. They've been extended, probably their first letter was a year and then they've been getting 6
Yeah,
months.
they are continuing to work. We have been up there. It's not, they're not done.
Yeah, so it seems that way.
Right.
All right, so,
But they're actually.
yeah, they're
Moving along.
I just wanted to know where they were in the process.
They had a lot more trouble getting financing than they thought they would have, so.
No, I think.
Right, so you get all in favor, right?
Yeah.
So it's carried. Next resolution, consenting to the assignment by Theowens LLC and Global Natural Foods Inc. of all their right, title, and interest, and to the project located 672 Old Route 17 in the town of Rockland, County of Sullivan, State of New York, to Catskill East LLC.
This is a transfer. Theowins LLC is owned by either Randy Lewis or Randy and Melissa Lewis. Same with Global Natural Foods. The land was conveyed to the IDA by Theowins prior to the construction of the building that's on that site. The building on that site has 2 tenants. The 2 tenants are Catskill Brewery and Global Natural Foods.
Okay.
One of the other members of Catskill Brewery is buying out the Randy Lewis and Melissa Lewis interest. So the project, they've already purchased Bass Fence, the LLC interest in the brewery. And now what this is about is to transition the building. Since the IDA owns the building, they're not buying a fee interest in the building, they're buying the reversionary interest to get it back at the end of the project. There's 6 years left. Motion, Sean?
Motion to approve.
I'll second.
All in favor?
Aye.
Any opposed? Ayes have it. Alright, so what do we do here?
So the next part is the annual discussion and approval of certain of the agency's policies, so this is in accordance with the authorities law. So in your agenda packet are the procurement policy, the investment deposit policy, and the disposition of real property guidelines. These haven't changed in the past few years. I think we changed one of them back in 2019, but there are no changes since last year. But the public authorities law requires that the board but reapprove them each year. So that's what I'm looking for.
Okay, so I need a motion to approve the procurement, investment, and disposition of real property guidelines policies.
No move.
Also, second, Ed, all in favor?
Aye.
Any opposed? Ayes have it. Next is discussion and approval of the mission statement and performance measurements.
So once again, the mission statement hasn't changed in many, many years. That's also included in your agenda packet, but there's an annual performance measurement report that we're asked to approve. So there are 5 questions. I'll say them in this meeting. They're the same for all 4 agencies, so just each year the board is asked to answer yes to these questions, or no, if you can answer. So the questions are: have the board members acknowledged that they have read and understood the mission of the authority? Do the board members affirm its membership, board committee, and management structure? Has the agency complied with the Public Authorities Accountability Act of 2005 and the Public Authorities Reform Act of 2009? Does the agency conduct business in an environment that fosters transparency? And does the agency instill and uphold high ethical conduct within the entire organization? So if the board is willing to answer yes to those questions, I will submit the measurement report to the Public Authorities Office.
Yes.
Everyone, motion to, do we need a motion for
We
that?
can do a motion.
Just poll everyone.
Everyone, I vote yes.
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 All right, yes. All right, next is discussion and approval fiscal year 2025 audited financial statements and public authorities reporting information system certificates.
So we have Andrew Arias is here to give a brief presentation on the audit report for IDA. Also included in these packets, this morning, are his summaries of the audit reports for the other 3 agencies. So if you don't mind, you could ask Andrew to just report out on each audit report during this meeting rather than 4 separate presentations. If you prefer it, otherwise that's fine too. But I would ask Andrew to just give an overview of the audits at this meeting.
All right, thanks, Jen.
He's right.
It's coming from your iPad.
Yeah.
Not now.
I'm not.
Too late. Let me turn it off then.
Ah.
We're gonna start with the IDA. You'll have a little handout, which is sort of the overview. And I'm just gonna, point out some specific items during the course of the audit, maybe some things that changed from the prior year. So just going through some of the activity, the revenues and the expenses during the year. The project fees were up $25,000 this year. Now, obviously, that changes as there's active projects going on. Some projects fall off, some new projects get added. That's mainly made up of those agency fees you would receive annually. The prior year did include over $50,000 in project termination fees, and the current year included $168,000 in project termination fees. And you'll see, I'll talk about it later, that's recorded in a mortgage note receivable after the project termination fee this year. Federal aid, you'll see, is down $93,000. That was because last year you had a USDA grant that you used to purchase equipment. You had no such grant this year. Interest income on notes receivable is down $9,700. That was 2 large loans totaling about $170,000. One was paid off in 24 and one was paid off in 25, which obviously would significantly bring down your interest income on those notes. And you also had $22,000 this year received in reimbursed professional fees from ongoing projects. So these are projects that were going in previous years. Some of the money that was held in the escrow accounts was transferred to the IDA to reimburse for those professional fees. And on page 10 of the report, you can see the comparative revenues. On that page is also the comparative expenses. If you want to see all the revenues and expenses, many of them are pretty much the same as they were the prior year. On the expense side, salaries and benefits were up $79,000. Our professional fees were down 59. That was because in 2024, you did have some ongoing significant litigation. So you had high legal fees in 24 that came down significantly this year. And you had some repairs and maintenance last year that had to do with the Catskill Brewery van that was repaired in 2024. Otherwise, the other expenses, they're fairly consistent with the prior year. We look through them all. On the lease side, you see there were four lessees exercised their option to purchase equipment, and a previously leased van was sold. Now, the way you guys had set up these leases, as the leases come due, if they opt to purchase them, there really is no gain or loss. It's sort of set up so that the net book value that's left is going to be a wash. The only reason you show a $16,000 loss for these is you had to return $14,000 in grant funds to the USDA. So one of the van that was sold, the proceeds from that van, most of those proceeds had to be turned over to the USDA. So it made it look like your proceeds were a lot less. But actually, if you look at it, it was about a $2,400 loss for all 5 transactions, which is a net of the transactions, and they all were about a break even on the step, which is what you're looking for when you sell those. There were 4 existing leases consolidated into one lease, and there was 1 new lease in the current year. Overall, the net position increased $45,000. The prior year, there was about a $118,000 increase. Of course, that varies from year to year. This chart here just shows your operating activity, so it wouldn't include anything like unusual transfers or something like that. But you can see the last 3 years, you've been pretty consistent in terms of your operating revenues and your operating expenses. Some of those early years could have been large project fees if you had a large project back then where you get that one-time fee. But now the last 3, it's been pretty consistent. As has your net position, stayed pretty consistent over the last few years. And this next chart, I just want to remind everyone about the GASB 87 lease reporting. Everyone's sort of familiar with operating leases. Usually you just have a lease expense or a lease revenue. When GASB 87 came in a couple of years ago, they had us reporting operating leases as assets, as opposed to just revenue when received. So just pointing out, when you look at the balance sheet, you'll see an operating lease receivable and an operating lease receivable current and non-current. So it's treated like a loan receivable, even though it's an operating lease, and at the end of the lease, the people can just back out and be done with it. But it is offset by an item you'll see called deferred inflows of resources for the leases. So when you look at your balance sheet, you'll see these receivables and you'll see the deferred inflows, which will be the exact same number, and it's a wash. So it's not affecting your balance sheet in any way, but it's just the way you have to report it on the finance, so it's sort of transparent how many operating leases you have out there. And on the income statement side, it also changed a little bit. Again, where previously you would just have lease income, which you used to have in years before GASB 87. Now you have to break it up between interest, income, and principal. So on your balance sheet, your lease, your income from the lease was $13,000, and we call lease income was $118,000. The total was $132,000, which is exactly what your lease payments were during the course of the year. So it all washed out to the same thing, but it's just the way they have us reporting it with this new government accounting standards board statement. How it tests work, it's usually we test your pilot disbursements for the year. We look at the agency fee and the pilot correct per the original agreement. We do the calculations to make sure they're being calculated correctly, and we make sure that if the jobs are not being met, job requirements, that the proper penalties are being charged to the person, to the project. We had no issues with that. We test disbursements. Again, we look at proper approvals, supporting documentation, canceled checks, and whether the posting is accurate into the general ledger. We test revenues, same kind of thing, making sure that the supporting documentation, and we do this to make sure that we can rely on those. We're not going to look at every transaction, so we do a test of a sample. If there's no issues with your internal controls, we can then rely on the fact that you're posting your activity correctly, and most of it's being approved and all that. Related party transactions are disclosed in Note 8, so that would be any transactions that have to do between Sullivan County or between the other LDCs. We had no significant findings as a result of our testing, no written comments, any minor issues that come up. I'll discuss with Jen and Julio as the audit's going along, and at the end when I provide the journal entries to them. But overall, they do a good job. The GASB 87 reporting in the financial statements on a month-to-month basis can be a little bit of a hassle to do. A lot of our clients just sort of wait till the auditors come in and we do the reclassifications for GASB. They actually do them, and the reporting is accurate. So they do a good job reporting during the course of the year on the books and all the agencies. So at least you're getting accurate statements throughout the course of the year. There are some reclasses and things we have to do. You get an unmodified opinion on your financial statements, which means that everything is reported in accordance with generally accounting principles, generally accepted.
That does. You need a motion?
Yes, that's what we call it.
Motion to approve the audit?
We wanted to.
Let's,
Let's go.
The other three agencies?
Do the.
Do-
have Andrew-
The other one's quick, the other one's quick. I can
yeah,
get-
no, that's what I'm saying, let's do the other ones and then approve all of them or
Okay.
not, depending on how.
Okay. Sullivan County Funding Corp. is, I'll do them first. Again, they are subject to government auditing standards as a component unit of the county. So we do have to do the same kind of testing of controls or activity. Basically the approvals, supporting documentation, we look at to make sure there's 2 signatures on every check. We look at the controls over your bank reconciliations and over the adjusting journal entries. We test them to make sure that there is support for any adjustments that are made during the year. Now, we do that at all audits, also with the IDA. If any adjusting journal entries made during the year, we take a sampling, we test them to make sure that's sort of management override of controls. Nobody's in there just changing numbers around. Sullivan County Funding Corp had $117,000 increase in net position. That was mainly due to the $250,000 transfer from the Sullivan County Resort Facilities LGC. Total net position is 1.22 million at the end of the year, mostly cash and 155,000 in notes receivable. Changes in activity from the prior year. There was a $12,500 grant expense you'll see in the audit report, and that had to do with a portion of a loan that was written off according to the agreement. When they got to a certain point, the remaining portion of that loan would be written off. So that's sort of a one-time thing in this year. There's a reduction of $100,000 in payments to the Sullivan County Regional Food Hub. So last year of that agreement, last year you sort of made a double payment, you paid 200,000, and this year you paid 100, so you'll see the difference in that expense line. You had the $250,000 transfer from Sullivan County Resort Facilities LDC, and then last year you had those transfers from Sullivan County. So sometimes you get these unusual things which we don't include in operating revenues. Last year you had 985,000 in loans transferred in from Sullivan County. You won't see that this year, obviously. And then you also wrote off 39,000 in loans last year. Related to some of those loans. Revolving loan activity, no new loans were issued. 84,000 was repaid on the existing loans, and as I mentioned earlier, 12,500 was forgiven in the form of a grant. And we also got an unmodified opinion on the Sullivan County Funding Corp, which is a clean audit opinion. Going on to Sullivan County Infrastructure. Same thing. Number one, I'm just not going to go through it again. It's the same on all of these agencies. They're all subject to government auditing standards. So we all have to test the controls, risk assessments, determine whether we can rely on those controls. Sullivan County Infrastructure had a $1.2 million decrease in that position. As I mentioned previously, that's due to the difference between the bond principal and the depreciation expense on capital assets. So what you're going to see is the decrease in that position getting smaller every year. There'll be a smaller decrease in that position, but it'll be a decrease for a while. At some point, once the bond principal payments increase, then the trend will reverse. Because you're getting money from the special assessment to cover the bond principal payment. Bond principal is not an expense,
We
obviously.
don't have to worry about that, none of us will be here.
Yeah, I thought I'll be dead before this thing finishes.
Yeah.
But trust me, in 30 years, it'll wash out.
26 years from now, it's gonna swing the other way.
Yeah, it'll wash, at the end, it'll all wash out, but it's just the timing issue. Change in net position, similar to the previous year, 36,000 decrease in investment income, that's just whatever the rates that are out there. And obviously you would have the 97,000 decrease in interest expense. Every year that's gonna go down as the bonds get paid down. The operating revenues and expenses are similar to prior year, so the operating of the organization is about the same. And Sullivan County Infrastructure also gets a unmodified opinion, which is a clean audit opinion. And then we go on to the new one, Sullivan County Resort Facilities LDC, was established in April 2025 as a component unit of Sullivan County. They also subject to government auditing standards, so we have to go through all the same testing as we do on the other ones, and all the transactions, make sure the controls, and I will say, we did the testing here at all your agencies, your controls are operating very good. Operating as planned, there's all the approvals are there we needed, the dual signatures on the checks, everything you look for is there. Authorized issuance of revenue bonds is disclosed in note 4 to the financial statements. So basically, if you look at the detail, it's sort of a summary. You guys know it better than me what's involved in it, but it's a summary in the audit report of what those bonds were and what the proposed transaction was. As of the date of the audit report, the bond sale has not closed. The main expenses for the year was 1.565 million in bond cost and that $250,000 transfer to Sullivan County Funding Corp. You will note in the auditor's opinion and the financial statement, there's a going concern mention. So there's an emphasis of matter paragraph in the auditor's opinion, and there's note 7 talks about going concern. And basically, that's what we have to report if there's a possibility of the agents of the organization not being in existence for more than a year. And in this case, depending on how the bond issue goes, it's possible that you may dissolve and get rid of this agency, but we don't know for sure. So it's just a going concern issue. And you can read the wording, and that's pretty straightforward. If the bond does not go through, it's likely you will be dissolved. Doesn't mean you have to. It may not go through, and you may find something else to do.
Single purpose entity, so if the bonds are not issued, we would dissolve. It
Okay.
doesn't have, it has a single purpose.
Okay, then you will be dissolved when it's done. And they also get an unmodified opinion on your financial statement, which is a clean audit report.
I'll make a motion to approve. No, hang on, we gotta do it a little bit differently. Can we recess the IDA meeting because we're gonna need to go into executive session at the end of the IDA meeting to talk about pending litigation?
Okay.
So can we recess the IDA meeting and then open the meeting of Sullivan County?
Okay, so we need a motion to recess the meeting?
Do we want
The
to
IDA
do
meeting.
The IDA.
couple of votes that we need to do for IDA before we assess it?
Do whatever you want. I was gonna do the others first.
So the self-evaluation?
When you do self-evaluation, what I need to do for them, and I need to do this all 4 times.
Right.
Is, what I need to do when I submit Paris is state that the financial information included in the annual report, you want to do that all later?
Let's
Do it 4 times, do it.
we have to do it 4 times, but let's do these 3 easy ones first and then come back to IDA, because these are gonna be quick.
So let's do the motions for,
Recess.
let's do a motion to recess. The IDA meeting. So, all in favor?
Aye.
Any opposed? And it's out.
Okay, now she's gonna tell you when she's live for funding fund.
Okay, we're just gonna open the public